Hey, I'm Drew Russell, your Sarasota real estate specialist, and this is the first edition of the Russell Recap for 2024. All right, so as promised, I am keeping up with shooting these deep dive videos once a quarter, and it's a bit of a labor of love. And if you like charts and graphs and the sound of my voice, you're gonna love this video. If you don't, you may wanna just skip to the end for some of my conclusions. But overall, the question I'm getting asked the most right now, with the most sincerity, is how's the market? Of course, we always get that in real estate. That's gonna be the first question out of anybody's mouth. But a lot of times I feel like people have a general idea or sentiment. And I find that with buyers and sellers or just the general public, people are all over the board right now about what is going on in the local real estate market. And after 2023, we had this really great start to the year, and by most accounts, a pretty abysmal fourth quarter. It was one of the worst quarters that we had had in a while, even though 2023 was a great year for us. The reason really was the peak of the surge in rates up to almost 8%, and I think just this really large feeling of uncertainty. And what the prevailing thought has been is that, let's get into our high season in the beginning of 2024 and see what's really going on with the market. The purpose of my video today is to kind of update you on what we've seen in this first quarter and hopefully give some indicators as to what we might expect through the rest of the year. So I would be remiss if I didn't talk about our personal real estate practice. I have a small team, it's just me and one assistant, and last year was our best year ever, almost $60 million in sales. We were top in our office and one of the tops in our market, and that is a credit to our followers and people who have chosen to work with us, but we've really just kind of learned how to offer a lot of value to our clients, and we're grateful for that. And that happened even in a year where we had a really tough fourth quarter all around. This year we're already at 35 million closed and pending. So is there activity in the market? Is the market strong? Are prices strong? The overall answer is yes. But let's figure out a little bit more of the where and the how. So taking a deep dive into local Sarasota County statistics, let's take a look at this first graph. And comparing the month of March of 24 to the month of March of 23 is a great time to make a comparison, simply because it is a peak month in our market. It includes seasonal activity and a time when most sellers and buyers are going to be fairly active in the market. So if you look closely here at the graph and you can compare March of 23 and March of 24, you'll see that we have almost double the amount of properties available for sale across all price points. So it was an actual increase of 94.7% over a year ago, which is extremely significant. But compare that to the amount of properties sold. We were down only about 9% over a year ago. And the amount of properties pended, we were actually up 7%. So you see in this graph, you see that the inventory is climbing, but the sold and pending activity is staying at a similar level. Even with that, you can see that months of inventory are really not going too crazy. At the end of March, we had about 5.5 months of inventory across the market, which is still kind of considered to be a somewhat balanced market, although that balance as inventory increases is still shifting towards the buyer. If you look more deeply into how long it's taking to sell a property, we saw when we shot this video a year ago that the time on market in 2022 to 2023 was a dramatic change. This year, we don't see quite as much. I mean, it has gone up, and you would expect that with double the inventory, but it's only gone up by about half the time. The average day on market right now is 68 days, as opposed to 47 from March a year ago. And the average sales price to list price percentage is staying extremely stable. Last year it was 93% on average, now it's 92%. That's of course down from the unicorn years of 21 and 22, where things were selling at like 102% of list price. So there is some room in prices, although you have to remember that not all list prices are created equal. Looking even further, if we kind of look at the average price per square foot, I think this is a really interesting indicator, because if you look at inventory, and we know in basic laws of supply and demand, when we have more t-shirts to sell, for example, you would think that the price of the average t-shirt would come down. And that is actually not what we're seeing. If you look at this graph, you can see that our average closed price per square foot was up almost 10% from a year ago, and really hit the high water mark on this graph overall. So for last March, properties were closing at a higher per square footage average than they had previously, which doesn't really make sense with the inventory increase. And if you also kind of look at what we have here on this graph, you can see the average sale price, and look at the surge from February to March. Our average sale price in March of 24 was $726,000. And when I look at this chart, there's only 1 month that was higher than that, and that was January of 24. So our average sale price in Sarasota, even with inventory doubling, is still significantly higher today than it was a year ago. So we're seeing prices continue to rise modestly, even while inventory rises with it. So let's take it even a little more granular, and let's look at the luxury market. And so for the definition of luxury, we're just going to say a property that's on the market for $2 million or over. Because with our average sale price of $726,000, $1 million home really isn't as rare as it used to be. So check out this graph, and I think this is really interesting to me. If you look specifically at our high-end market in Sarasota County, you'll see that in all price points, as we demonstrated in the previous section, inventory had almost doubled. It was up almost 100%. If you look at the inventory change here in properties above $2 million, that change is only 37%. So we only added about 1 luxury property for every 3 other properties that hit the market. And if you look at the sold activity, this March versus last March, we're up 32% in 2024 for sales. And if you look at the amount of properties pended in 2024 versus 2023, we're up 80%. So those are not numbers that indicate that our high-end luxury market is struggling. And I mean, that is the truth. We're seeing strong prices. We're seeing strong buyer demand from outside of the area and in the area. We're seeing the market behaving really well. Another further sign that I find to be very interesting is that if you look at this graph, which just shows our months of inventory, if we compare March of 23 to March of 2024, there's only a 3.8% increase in available properties based on the absorption rate. So that is a really strong profile overall of the market. We're continuing to see strong values hold. We're continuing to see things move. And yes, we're picking up inventory, but we desperately needed it. We need more choices for buyers. We're still seeing the very best properties get snapped up quickly. And if I went back to early 23, where I think the economic outlook was starting to change, people were starting to get nervous, rates were starting to come up. As that cycle began, and on the tail end of the unicorn years of 21 and 22, a lot of people said, well, this is crazy. We remember what happened in 2008. We think things are going to slow down, so we're going to wait and sit out this part of the market. I'm going to talk a little bit more about this in a second, but as you can see from the data, that probably was not the best decision, because whether it's inflation, rates, whatever you want to call it, property values have still remained very high and quite stable throughout the beginning of 2024. So another type of call that I'm getting a lot are people that are feeling like they may want to get more involved in the market, whether that's through investing, buying a vacation home, looking at opportunities in other markets, asking for referrals for other agents in other areas. Take a look at this graph. If you look at this, as of now, almost 68% of Americans either own their home outright, which is going to be almost 40% of people own their homes outright, or the rest of them, about 28%, have greater than 50% equity in their home. So these people have a ton of value accumulated, and that value creates a sense of freedom if they wish to have an equity line, refinance, collateralize their property to use the equity against something else, or just the comfort of knowing they have that huge savings. They're ready to start putting other money in play. And I think that equity is a lot of what's propping up the market. People aren't in danger of not making their payments. They're not worried about being unable to sell their home. They have so much equity. And I think that is going to be one of the huge factors that keeps our prices strong and keeps people investing in real estate. And so getting back to this whole idea of we have a negative outlook on the market, which, look, when I think you should have a negative outlook, I will tell you, and I shared in some of those thoughts, I'm just not seeing them come to fruition. So let's look at the final analysis nationally here at this slide. You can see that the final 2023 home price appreciation rates nationally across the United States were about 5.5% to 6% depending on who you ask. So that is a huge amount of money that people gained in their pockets through inflation or just equity growth. And then if you look at what most of the main players are saying, look at this 2024 home price future cast here. You know, most, let's call it an average of 3%. Most people think that home prices are going to continue at the 3% clip. So going back to the beginning of 2023, that's 8% appreciation. I mean, that's a substantial amount. So again, it seems like the people that are sitting on the sidelines are only seeing home ownership get further away from them, or finding maybe some of their options a little harder to find at a price that's palatable. So one thing that we talked about a ton at the end of 2023, of course, was mortgage rates. I have not gotten too deep into the weeds on it in this video, and it's because the conversation surrounding it has really changed. I'm going to put this quote up from the chief economist of CoreLogic. She says, as mortgage rates continue to hover in the 7% range, it will be difficult to convince existing homeowners to move at the current time. Nevertheless, as a recent surge in mortgage application data has shown, following a drop in rates, buyers are anxiously waiting to jump into the market. That means that 2024 is likely to show another year of home price highs. And we saw this. We saw rates hit 8%, and then we saw them come down to maybe the 6.5 range, best case scenario. And it was like when it got under 7 and then got towards 6.5, people were back in the market. They had accepted that the 2 to 3% mortgage was a thing of the past. And a lot is going to depend on what the Fed does. It seems less and less likely now that we're going to see June meeting rate drops on the federal funds rate, which I think a lot of people were hoping for, but I think that the Fed is worried that the economy has not quite cooled down enough, and they're worried about kind of restarting that inflation cycle again. So let's look at these updated projections for rates. You can see that most people think that, that Q4 and Q3 of 2024, we're gonna see rates touch down near that 6% range again. And I think, alluding back to the quote that I had earlier, you're going to see people accept that as kind of the new realm in which we do business. Maybe they're going to float back down into the high 5s again in 2025. We will see. But if that continues to happen, that is just going to continue to perpetuate a strong market cycle for real estate values in Sarasota, and I think nationally as well. So there's always the other shoe that can drop. There's the election year that we're going into. There's, all kinds of other potential geopolitical disruptors, but just based on the data and the facts, which is what I'm trying to bring to you in the Russell recap, I see a very favorable environment And I would say another word would be a stable environment for real estate values and just the overall market going into our second quarter and beyond. And I'll be back with you in another 3 months, God willing, to bring you that next little bit of what's going on in our market. If you like this deep dive and you have an interest in getting involved in our market, I'm available. You can contact me. Happy to have a conversation about the next steps. Thanks so much for watching.